I'd like to bring to your attention that our next session explores the future of rural finance through the lens of digital innovation, development finance, and inclusive policy frameworks. And we also notice that there's been a growing push towards financial inclusion. The focus has been on how institutions are building robust, tech-enabled infrastructure in order to support credit delivery, insurance, savings, and payments for India's rural population, which is why this session is absolutely pivotal and absolutely pertinent right here at GFF 2025. I'm about to take a quick check from my team. If you're good to start the session, yes, we are. Well, looks like I'm all set. Some of my audience members are set, but for those who are still standing here with all your enthusiasm, let's have you also take your seats so that we can officially get the session started. This afternoon, ladies and gentlemen, this afternoon, in fact, we have with us someone who doesn't just adapt to change, but he truly, truly drives it. A visionary leader, a relentless innovator, and a powerhouse of ideas. In fact, his career has been defined by bold decisions and an unshakable commitment to excellence. Ladies and gentlemen, we have the august presence of none other than Shri Shaji K V, Chairman, NABARD. Let's have a huge round of applause as we welcome on stage Shri Shaji K V, the Chairman of NABARD, and if I may please invite Mr. Bhavesh Jain, Managing Director and CEO, TransUnion CIBIL, to please join in to spearhead this incredible fireside chat for us. With that, let the fireside chat begin, and let me please hand over the proceedings to Mr. Bhavesh Jain. Over to you.
Good afternoon, everyone. I know post-lunch sessions can get very difficult, but I'm sure the conversations, the presentations over the last 1.5 days have made our mind running in terms of the opportunities, in terms of the growth areas, as well as things we need to watch out as an ecosystem. And as we keep expanding the credit ecosystem within India, one big focus area for all of us is the rural geography, because as India or as Bharat, we cannot achieve our dreams without focusing on rural. We have been doing that for many decades now, but it's important that we continue our focus on rural geographies across all areas, and specifically credit, because credit is going to play a pivotal role towards the growth of rural geographies. With that, I want to give some stats. When we look at today India's credit market, it's 274 lakh crore across retail, MSME, and corporate. Now, over last 10 years specifically, the credit growth has happened across different age groups, across different geographies, and happy to share on the retail lending side, the growth has been higher in semi-urban and rural locations. The growth has been higher in the younger population, and the growth has been across both secured and unsecured retail products. And on the MSME side, it's a very encouraging number to see that almost 50% of the MSME borrowers coming through the door are actually new to credit, which is what we require as a developing nation to fulfill our dreams of a developed nation. While we look at these encouraging stats over the last decade or so, it's important for us to have the next 20-25 minutes focused on rural credit growth, and who better than NABARD chairman to talk about it, because he's not just talking about it, but he's living, and he's inspiring all of us to focus on rural credit. With that, sir, I'll ask you the first question in terms of what are the challenges which you see in terms of enhancing the growth of rural credit in India, and what inputs would you give to the audience in terms of how do we solve for it?
First of all, thank you. Thanks GFF for having the rural credit take center stage here, which is very important this time when India is growing at the faster rate. I think we need to take all sections of society together, and that's the concern of Government of India when we discuss with government. This rural credit, which is rural India, which is growing at around 4%, need to be accelerated, that growth need to be accelerated, and for that, what best other than credit need to be there. So in that context, there are challenges are well known. Of course, accessibility, everybody knows about that. More than accessibility, I feel that trust should be the first thing, because there should be trust between the lender who is giving away the money and the borrower who has to be the custodian of that money. So that trust need to be proper. Then the information gaps, of course, that flows from the trust. The information gap need to be built, bridged. And then there need to be adaptability in terms of the products which are available, and it should suit the rural economy or rural activities. And these challenges need to be done in a very different manner, because as of now, the size of the pie is lesser. So the innovation for which huge investments are needed may not be readily available, because this demand for credit is very dispersed, and it is in smaller amounts. We are talking about retail, then it is there is a sufficiently higher threshold for any bank to lend retail loan. When we talk about rural credit, it will be 1/4 or 1/2 of that amount, which naturally increases the operation cost. So now here, the challenge of payments have already been met, because the payment system in India is very well robust. But now next stage is the credit. The payments, the history which we have built through payment systems need to be followed up with the credit. So if you can think a little innovatively, there are a lot of digital trays available for structuring credit, which I think the fintech companies need to be aware of, and how we can intervene in here for innovatively design the products. So here, of course, the availability of internet connectivity is a major issue. Whatever you plan, if it is not being accessible, because physical access in terms of touch points, anyway, it will be very difficult for any economy to meet. But then internet accessibility, once it is there, so that challenge need to be overcome first, and then make available all these technology innovations in terms of product innovation, in terms of different tools for underwriting credits, and all these things have to be there. And then we need to actually educate the borrower adequately, because if you want to bridge the problems in the rural areas, I think more innovation will also create some sort of a mistrust. That means we need to educate the people who are already semi-literate. So that itself is a task. And then and make available these products at the right time when they need, because seasonality is an issue in rural areas where the agricultural income is coming in lump. Actually, we are now trying to actually make this agriculture as agribusiness. If you see the last union budget, where Government of India declared its intention of transforming agriculture to agribusiness, so a lot of MSME journeys which we have already set up should be adopted, should be tackled and then adapted for the agriculture activities as well. So that is where we need a lot of innovators to come. So, so to sum up, what I feel is that the trust need to be there. Access anyway is a challenge. Trust, and then the adaptability and the availability of the products at the right time when they need.
Thank you. So takeaways for me is that ensure you build trust with the consumer. Second is we solve for information asymmetry.
Yeah.
Third is that continuously focus on innovation. And fourth is make sure that we work a lot on consumer education, especially on this customer segment. And we just had Mr. Nandan Nilikani do a session some time back, and he's played a pivotal role in India's digital transformation. And we have our very robust digital public infrastructure. Sir, what opportunities do you see in terms of digital financial services being extended to further the cause of rural credit in India? What are the opportunities you see?
Yeah. So in India, the digital public infrastructure, we all know the Aadhaar system, there's India stack and the NPCI stack which is there. So now it is for us to work on this. Already data is made available, but then we should access those data in the way in which it can be it's structured for the rural areas. And for that, we need, I'm not expecting any private entity to come in. So it is a quasi-government type of entities which need to be active in such areas, and that is where my organization NABARD fits in. So what we are trying to do is that we are actually developing the ecosystem where we are leveraging the digital public infrastructure which is already built. Right now we are in the midst of computerizing the primary agriculture societies. Many of you may be aware of that, but then they would have written it off as institutions. But we have a hope that if we want to bridge that last mile in rural credit, we need to digitize the primary agriculture societies, which a private entity may not be interested. So there, a quasi-government or government need to come in, and that is exactly what we are doing. As of now, we have digitized close to around 70,000 primary societies. We have data of close to around 10 crores of farmers, which otherwise is not available, because sometimes it may be reported that these farmers are not availing credit. They are actually availing credit, but then their data is not available. So now we are making available that data. That is one step. And we are now leveraging the digital public good, the India stack, which is already there, the NPCI stack. So all these things, we are leveraging it through this computerization part, which we are doing. And again, we are also innovating on the way in which, the crop loans, which is now termed as Kisan credit card, where government intervention is there. But then the quantity is smaller, so many private entities may not be interested. So digital innovations there may be very scanty. So there we are digitizing that journey, end-to-end digitizing, and this is not for any single entity. This we are developing both the primary society computerization and also the crop loan digitization, which we are doing, this is as a digital public good we are doing, because we as an entity we are not a commercial entity, we are an ecosystem player. So we are making available these developments for any private entity to come in, so that their cost of operations in vending money or vending their products can be reduced. The problem with the rural area is that, yes, we can make available loans, but then that rates will be very high. Unless we leverage such digital public infra which are already there, and then reduce the cost of operations, that is one thing. And second thing is that we have to reduce the cost of funds also, where the information asymmetry will be there. So now the cooperatives are one such entity which are in the local area, but then people may not trust them because of the governance issues and such other issues. These issues we are now tackling it, and we are sure that maybe in another 6 months, when the computerization is also is in full swing, and which is complete, once it is completed, I think we'll have close to around 14 crore data farmers, which otherwise not reported as formal players in the credit markets. So they will also be formalized. Plus the innovative products, we are building a centralized digital credit infrastructure as a platform, as a digital public good, for any entity to come in and leverage those capabilities to develop innovative products. So that also is made available as a layer. So all these activities, we are leveraging the digital public infra, which Mr. Nandan Nilekani was talking to. And then as we go ahead, because the digital public infra first solved that, as I said earlier, the payment issues. Now the credit related and the insurance and such other things also need to be evolved based on the DPG, the digital public goods, which we have created.
That's really good to know. Sir, you just launched some time back the CIBIL Grameen score. And if I have to talk about the progressive government initiative and the budgetary announcement on the Grameen score, what role do you think Grameen score will play and how it's going to benefit the rural borrowers and the lenders at the same time?
So I mentioned about the trust between lender and the borrower. To bridge that trust, there need to be a lot of intermediaries there. I see Grameen credit score, which is an additional data point for any lending entity with the regular score is there, CIBIL or credit information scores are there. So this will actually accentuate the formalization of rural credit. I see great potential, especially in India, where actual transactions are happening and people are very good in terms of repayments, but those repayment histories are not being tracked or digitally made available, and that's not their fault. So once we talk about any of these default in loans, it is not that who has defaulted, but it is not that why system didn't allow him to pay. So that is what we need to do. So he, as an entity, he may be inclined, because we have seen our experience with rural people is that they are they are more good in ensuring that whatever dues they have to pay have to be paid on time. We saw that in the SHG bank linkage programs, in the KCC programs and all, where they are very prompt in repayments. But then the problem is that whatever activities they have undertaken in terms of transactions are not adequately captured. So there, the system need to be helping them to pay and also make known to others that they are good borrowers. And that is the role, I think, Grameen Credit Score, like things will be helpful. So I hope that, as we have launched the first version, I understand, with the making available whatever alternate data and all that. But we need to augment that with many other features, including non-traditional data sources. So I hope Grameen Credit Score will be a real, a real influencer in augmenting rural credit.
Sir, very good point. You spoke about alternate data for Grameen Credit Score. Sir, with your rich experience, can you throw some light in terms of what all alternate data sets which we should look at, and we will continue to engage with the regulator in terms of getting access to those alternate data to solve for new to credit? Sir, any recommendations for the alternate data points, sir?
Yeah, so here normal credit score will look at their credit history, their credit transactions. First important data point is that their payment history, which is always, with the UPI and other NPCI products, there are sufficient data points to track their payment behavior. So payment behavior need to be proxied as their financial capability to pay or their income, some sort of a proxying. So we may have to have an iterative model, a payment scoring model type of thing we may have to develop and then integrate with the credit scoring model or the Grameen credit scoring model. For that, we need to engage with even the regulator also. The regulator has to be given appropriate confidence that this will be sufficient enough, partially at least, or maybe giving an inkling of his economic activity. That is one thing. And second thing is that the social media behavior. That itself shows that his that behavior, if you can track properly, that will show his intention. So as I said earlier, so he may be defaulting because of various external issues, but his intention to pay is always there. The system didn't allow him to repay. That's what we need to keep in mind as far as rural customers are concerned. So in that case, the social behaviors need to be tracked properly, and that if we can integrate into the credit scoring models, so that will give a very actually that starting point for formalizing his, and then we are actually helping him in availing credit, and then the regular credit scoring can take off. So that point, that we have to help the rural borrower to reach that stage, for which we need to think intuitively. What all alternate scoring models? I told about 2 or 3 things, but then we have enough experiences elsewhere in the world. So those experiences also need to be factored in. So if you see the traditional SHG bank linkage model, so there the social collateral was important, but then we can't quantify that social collateral. The pressure to pay because of his people around him, that actually exists in the rural society. So he's not a single individual, and unlike maybe in a urban area or a metro area, individualism is more, but in rural areas, more of social behavior is there. So that need to be appropriately tracked, and that is the challenge which fintech agencies or any tech agencies need to think intuitively and come out with some model.
Point noted, sir. Sir, moving from borrowers back to the credit institution, sir, you made a very valid point of digitization on the PAX side. How can that digitized data be leveraged for rural underwriting, which will benefit the borrower and the lenders both, sir?
Yeah.
Any thoughts on that?
So here, as far as rural institutions are concerned, there are 2 types of institutions. One is, I'm telling about the substantive institutions. We have the NBFCs, MFIs and such other things. But then the substantive institutions are the regional rural banks and the cooperatives. In fact, if you see original rural in NBFC, if you want to ask, That is the cooperative institutions, because they are not exactly banks, but then they can do banking activities plus other activities as well. So in that context, what we are trying to do is that we are digitizing both, and then the capability of these institutions to service all the requirements are limited because of their financial muscle available, because they are all small institutions. So always there is a chance of partnering with these institutions to vent other types of loans. They are more focused. Such institutions are more focused on priority sector loans and more particularly agricultural loans. But then there are needs of the customers other than these as well. For that, I think other entities can come in. The co-lending models can be thought about, securitization models can be thought about, and we in fact will encourage and we in fact can provide the platform for all such type of non-traditional methods of lending to work on rural lending.
Great. So recent times you have seen the consolidation of the regional rural banks. How do you think, sir, that is going to help us towards driving more credit inclusion in the rural locations?
Okay. So to give a perspective, if you see the regional rural banks as a whole, there are right now 28 regional rural banks. The total size is around 13 trillion, their balance sheet size, which is equivalent to a mid-sized public sector bank. That is one thing. Second thing is that the number of touch points they have, 22,000, which is equivalent to State Bank of India's number of branches. But here the difference is that all these 22,000 branches are in either semi-urban or rural area. And then the number of customers which they deal with is 30 crores, which is which is more than many of the public sector banks. Maybe we can equate them with the mightiest of the public sector bank. So that means they have the strength, the reach. The issue is that the digital adoption in these banks were minimal because of their smaller size. With the recent one state, one RRB amalgamation which Government of India has adopted, they are now grown in size. Here again, one perspective I'll give, the largest regional rural bank, which is the Uttar Pradesh Gramin Bank, it is at 2.2 lakh crores of balance sheet size, which is I think better than many of the public sector bank or a commercial bank. If you see, smaller commercial banks are there which are 1/4 of their size as well. So they are now become mightier institutions. They have the financial muscle to invest in technology, where now we are chipping in as a follow-up to the amalgamation of regional rural banks. One thing we have done is that branding across India. It's the same brand, same color pattern, to have a unified feeling that they are an all India institutions, but then regional focused. That is one important thing. And all these are government owned and scheduled banks. So there is no issue of public trust being there, guaranteed by DSCGC. That is also there. The third thing is that the credit innovations which need to come in, we are putting up a common digital credit infrastructure for the regional rural banks. So it will be launched shortly. So right now they are more focused on Kisan credit card loans and self-help group loans. Now we want them to diversify according to the needs of the rural sector, because rural sector, their desire has also grown up. They are now into loan against properties, vehicle loans, housing loans. There is a Awas Yojana program where larger share of credit can go in. So we are now helping them to develop products suiting the varied needs of the rural society. That is what we are trying to do. And then with the common infra in terms of fraud management services, cyber security and all, we will enable them to be a top-class entity equivalent to the best of the commercial banks in the country. That is the intention, and that will happen soon.
That's helpful. Sir, you spoke about credit awareness and consumer education. And for our dream to be building a credit fit India, what's the importance of credit education? And how do you think as an ecosystem we can further the cause of credit education, sir?
Yeah. As far as credit education is concerned, we have seen how the microfinance industry has played out in the recent past, when the regulator gave them some leeway to increase their share in number of loans per individual and all. Most of the microfinance institutions saw an opportunity, and they expanded very fast. As a result, stress was built up, which now we are tackling. So now here the problem is that the easy acceptability of the availability of the loan we need to make aware the people to be responsible in using that money. Money will be available, and then there will be some recovery actions also on them if they are not paying back. But then it is our duty to make them aware to handle this money which they have in a responsible manner. As a corollary to that, see, no, these microfinance institutions, I'm not blaming them, but any lending entity will try to push credit. But they need to be aware that the capacity to repay that loan need to be also built. So their regulator has come in that annual income criteria, which is very serious one, because they need to, whatever loans they are taking, they should be able to service that loan, at least the interest portion, and then maybe 1/10 of the principal portion. So the that income need to be tracked properly. As a corollary, we need to help them in building some enterprises where their income has to be there. So here the awareness, the responsibility of the people to handle the money, and their ability to handle in terms of developing the ecosystem for improving their livelihood so that they can pay back the whatever debt they have taken. These are all very important things. So not only that, no, we have to structure the credit as per the need, but then we need to educate them also, to the other hand, to handle those credit.
Okay. Sure. Sir, we all know that MFI has played a very important role in the rural credit space. And as a career banker, sir, any recommendation for the MFI industry?
This will flow from the previous answer. First thing is that they should lend loans in a responsible manner, because they should be aware that they are dealing with people who are not that aware about how to handle their finances. So that is the most important thing. The second thing is that, of course, their cost of operations are very high. In fact, their cost of funds is high, but then we can't help on that. But they have to improve their efficiency in terms of reducing the cost of operations, so that the rates at which they are giving the loans, they should not be just profit-minded. Of course, profit is needed for sustainability, but then if their existence also need to be there on an ongoing manner, they should be very stingy in generating profits out of each transactions. They should actually work on the volumes rather than per transaction profits. So that is what they need to be aware. So the social awareness, and then some part of whatever literacy aspects which we told. There are a lot of agencies with whom they can associate, including from NABARD. There are Center for Financial Literacy is available, Financial Literacy Centers are available. There are rural self-employment training institutes are available. So they need to look at the policy guidances given by the government and accordingly structure their operations. They should not merely focus on product development and pushing the credit and then going for the recovery. Rather than that, they should look at the ecosystem, and as an ecosystem player, how can they be of help? That is what they need to do.
Absolutely. So I like you re-emphasizing and highlighting the point is that consumer credit education will be a key factor for enhancing credit in the rural market.
Yes, sure.
And sir, if you have to summarize and talk about the way forward for rural credit in India and things which we need to watch out for, opportunities which we see, and the growth potential, sir.
Yeah. So you also indicated in the beginning itself that the rural credit is growing at a faster pace. That's an indicator of what things need to come. And if in the Indian GDP, if it has to grow further, the rural GDP has to grow in I think thrice or in 4 times in shorter possible time. So right now, roughly out of the 270 odd trillion which you have mentioned as assets, we will be having hardly 30% of that in rural sector. So this share has to reflect the real population share in the rural areas. So that is the potential which is available. For reaching that level, I think it has to triple in next 5 years. Where it will triple, that is what the agri-finance, mostly it is saturated, but then around 20% of that has to be now bridged. 20% informal lending happens there. So agri-finance has to grow from the current, say, around 20 trillion to by around 20% it need to grow. But then MSMEs, rural MSMEs has to grow at a faster rate. Maybe at 15% or a CAGR of close to 20%, it need to grow at the next 5 years, so that the rural income can be, and then the vision of the government to transform agriculture into agri-business can happen only when push is there in the rural MSME. And then added to that, we need to have some sort of climate resilient activities also coming in, because climate is one area where we need to watch out, especially rural areas. There, we need to have some sort of a climate finance be made available, not at the retail level, but at the wholesale level. Some sort of a climate resilient rural infrastructure need to be built. That there is a potential for such type of lending. Already RBI has classified certain aspects of that as priority sector lending. Banks would structure products based on that, and also their internal capacities need to be developed for vending those type of credits. So these three areas, I think there will be huge potential. I see from the out of the 275 trillion, if it is stagnant, then from the 30% or 40% share right now which we have, I think that 275, half of that should come from, that is the headroom which is available. So this 275 will not remain stagnant. I know that, we all know that at around 12 to 15%, the overall credit also is growing. So we have to catch up with that, plus an additional, say, around another 15% need to be added on an annual basis. So the potential is huge. There is and the ecosystem is being built in terms of developing histories, including Grameen Credit Score, which is coming in, which will be handy for proper underwriting. And then the activities of digitizing the rural, economic activities, that also is now gaining momentum. As we speak on 11th, Honorable Prime Minister is launching the 100 district program, that Dhan Dhanya program, where he is focusing on credit deficient districts, which need to be given additional focus. The regulator has already given additional weightages for these districts. So these are all policy pointers. I think the players in the market need to now find opportunities in the policy directions which are being given. There is huge opportunity. Even there is some cream to be taken out. Of course, we should not see it as a pure business opportunity. It's a nation-building activity as well. It's a social finance which we need to have. In certain areas, there need to be a blended finance to come in. So there, development financial institutions like NABARD will play a role. We are having a lot of discussions with multilateral institutions and also domestic institutions to put up such blended finance opportunities where we can push, we can develop the ecosystem for vending more credit.
Thank you so much for sharing all the insights. And if I have to just quickly summarize in terms of, for us to further increase the growth rate for rural credit, we need to focus on these areas. One is, I take away in terms of usage of alternate data for underwriting. Second is focusing on consumer credit education. Third is in terms of digitization. Fourth is in terms of making sure that we work with the regulator, with the credit institutions and the consumer together to make sure that there's a higher level of awareness, and we progressively build this whole credit market in the rural sector. And most importantly is that we leverage all the tools to make sure that we work with the consumer and the credit institution for the rural credit growth. And thank you so much, sir, for sharing your insights. It means a lot, and we will have a lot of takeaways from your insights. Thank you.
Thank you. It's my pleasure as well.